Hello YouTube, Salivate Metal here with a blast from the past. Do you remember when gold hit $1,000 per ounce for the very first time in history? Well, I do. And let's take a look back at this article from CNN back when they had a little bit more credibility than they do now. Um, and let's analyze a little bit here. We have just a little backstory here. In December of 2007 is when the Great Recession hit, and this is as a result of it with the economy. And so let's kind of read this article through and see where things were back in March of 2008. Gold prices touched the $1,000 milestone for the first time Thursday as the dollar plunged amid nagging fears about the health of the U.S. economy. After weeks of flirting with the key psychological mark, COMEX gold for April climbed to $1,000 an ounce in morning floor trading. Prices later peered their gains and were most recently up $1,660 to $997.10 an ounce. Sending prices higher were another drop in the dollar, looming Federal Reserve interest rate cuts, and rising inflation. Supply and demand is not really the driver of gold prices, said UBS metal strategist Robin Barr. This is about global financial stresses. Falling dollar. The dollar hit a 12-year low against the yen and retreated to yet another record low versus the euro Thursday. As the price of gold appreciates compared to the dollar, investors pour money into the commodity in hopes that their gold will maintain some value. Perhaps some investors have reached a point where there is nothing better than a hard physical asset like gold, Barr said. Many economists expect the Fed to cut interest rates by 1/2 of a percentage point when the U.S. Central Bank meets next Tuesday. Again, this is back in March 2008. As interest rates continue to dip and funds tied to interest rates like money market accounts lose their yield, investors look to an asset that will provide a stronger return on their investments. Gold is a non-interest yielding commodity, so lower interest makes gold a more attractive commodity, said Barr. When the central bank slashes rates, inflation rises as the dollar loses its value. As the Fed has cut rates to 3%, prices have risen to an annual rate of 2.5% according to U.S. Labor Department reading. Traditionally, investors put money into government bonds and tips to ward off inflation. But recently, bonds have provided historically low yields, and many have now transferred their funds into gold. It may be that we've reached a point that not even those instruments are adequate insurance against inflation, said Barr. But historically, gold has failed to keep pace with inflation. When the economy ends its current downturn, gold prices should eventually fall. Well, we see what happened there, as it did 28 years ago. After hitting the $847 mark in January 1980, gold futures fell 70% to $253 in August of 1999. There's still a long way to go. Even so, gold may continue to soar. The shiny commodity has long been considered a safe haven for investors worried about the economy. The current environment is such that the doom and gloom scenario plays right into investors' hands, said Barr, who believes that gold prices will continue to rise as long as investors are worried about economic recession. Though forecast points to no recession, and they were wrong there, hedge fund clients are quite fearful right now, and that just goes to show you, before I continue with the last sentence here, is that at this point in history, in this point in time, there was no recession. They had not realized that in December that we had started a recession. The GDP numbers hadn't come out yet to be able to tell us. And so there was no fear of recession at this point, even with a Republican president who was disliked greatly by a news organization such as CNN. So in 1980, continuing along with the article, is proof that gold prices continue to go up. Though gold has never been traded at a higher price, the $847 in 1980 would be worth $2,170 in today's money, more than double the current price of gold. Now, keep in mind that this article was written at a time when we had half the debt that we have now, less than half, and they, essentially there was the factors for another recession at least are there right now in the economy, and I think we are heading there in some turn, at least a recession, if not maybe even a depression. But that maybe we save for another topic. But post your thoughts about this blast from the past when the silver rose to $1,000 an ounce, and you think about it, $1,000 an ounce for gold, and here it is now, 1,220 some odd dollars an ounce. And so it's only $200 more an ounce higher now than it was then in 2008. But it's holding its own. Silver has gone down quite a bit in comparison. But post your thoughts below about this information and this news from the past. And what do you think gold's heading when the next big recession hits or depression? I'd like to extend the multitude of gratitude y'all for watching and encourage you to please rate, comment, and subscribe. And click that little bell. Yeah, ding, ding, ding on the bell thing. Yeah.